Okay, hello, folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be with everyone. So we do these webinars on Thursdays, look at some of the things happening in the market using some of the tools connected to TradeStation. What's happening here at this? One second. My PowerPoint was being strange. Just showed this again really quick. Jump through these. Huh. I don't know what's happening. I'm going to just show my PowerPoint natively on the screen. I'm just put it up here. There you go. You can take a look at it. The presenter mode wasn't working for some reason. I'm also going to put a few links here in the excuse me, in the chat. You can check those out. And I'll show the standardized returns of some ETFs that we may be mentioning. We use ETFs heavily for kind of analytical purposes, looking at where relative strength in the market is at any moment in time. Not some of the ones that we show are not necessarily something that people necessarily trade, but they are very useful to see different areas of strength in terms of sectors and industries. All right, so I'll show you those standardized returns right now. And okay, right here. Have a new workspace. I didn't get into the zip file yet, but I will very soon. It's actually a really cool thing I'm kind of excited about. It's an idea I had this week, and worked some of our engineers here and kind of coded something I thought was pretty interesting. I'm going to show it to you in a minute. It's a new indicator for finding stocks that might be accelerating. These are standardized returns of some certain ETFs. Also, now remember, if you go to tradestation.com, I'll just show you, start on our main site. If you go to tradestation.com and then you go to up here where it says Insights, and you go to the link for Insights, that will take you to the Market Insights blog. And on the Market Insights blog, we have our rundown for today's webinar. So you might want to check that out. We're going to be mostly covering things included in this blog post. These are just kind of bullets and talking points. Now, don't forget also that I'm going to be in Miami the week before Thanksgiving at the Crossroads Summit, which TradeStation Group is sponsoring. Crossroadssummit.com is the website, and there's going to be some really interesting speakers talking about changing trends in the world of business and economics. I'll even be interviewing some of them, so hopefully you can make it. November 21st and 22nd are the dates. Crossroadssummit.com. There's a link here as well if you're interested in checking that out. Remember, our next State of the Market will be on Monday. And if you want to see some of the zip files, if you want to see get the workspaces that we have here, you go to the zip file and then you bring in the ELDs into your TradeStation platform. Then you can run the workspaces that I'm going to be showing you now. And you know that we actually kind of walked through that last week, so I'm not going to get too much into that this time around. But I showed people how to do it in last week's show. So basically, I want to actually start off by looking at the S&P as usual. And if you look here in our blog post, this is more or less the chart we were working with. And what was interesting to me was that we really spent a good chunk of time here above this September high. We got within a few points at the worst, but this was our Fed rate cutting day. The market was weak and then gapped up, and we've really held that gap at this point in time. So it's interesting to me, though, is to see basically that the as we've been sitting here, the 50-day moving average has been kind of starting to rise more quickly. And if you look at other times, this is this June was a good example of it, where basically we we got back near the highs. We worked off the intermediate term sort of neutrality. It was intermediate weakness turned back to intermediate term bullish. You can see with the 50 days starting to rise there. So to me, this is a signal when you consider where we are in the year right now, with earnings season coming up and going into a part of the year that's relatively strong. And I do think we have to remember is that a lot of people, I think, have this quasi-religious belief that the market will rally after the election. And I think we have to be really careful of having faith in anything like that, because the fact is that if everyone thinks that, then it might rally before. And I think that's really a risk we have here. The market is extremely tight when we look at the way this price action is, with really no ability to put together the downside. Last week we looked at the geopolitical stuff, and literally the day after, you basically have the strike ended. nothing happened in the Middle East, and then Israel seems to be focusing his attention now on Lebanon instead of something with Iran. So whatever it is, it's like this is what a bull market does. It's like when things are supposed to go bad, they just don't. And that's not to say to be complacent or anything, but at this point in time, I think we want to focus on what the chart is telling us. The chart is telling us the intermediate term momentum is accelerating. It's telling us that we basically have new support above old resistance. It's also basically interesting if you look at like the VIX. I'm going to go to this other chart here for the VIX, but the VIX has not been able to really put together. Has not been able to get much above like 24. Let's look at the VIX $ VIX.X. Not been able to really get above this level here. And also to me, it's very interesting to look at something like the euro yen. You know, the this could have been the boogeyman that killed us. The yen was going to kill us, and then no, it doesn't. So I mean, in a bull market, again, like the Middle East thing doesn't blow up. The strike ends. The dock worker strike. I mean, it ends. And then there's just one thing like that after another. And I gotta say, today's CPI report, yes, it was kind of high, but actually, I got to show you this number, which is, probably more important. This is the consumer price index for all consumers shelter in U.S. cities. Shelter is like more than a third of CPI, and it is the real kind of thing that has kept inflation high. So we take this now, and we're going to make this into a year over, the percent change from a year ago. And if you look at this, you can see here when inflation, when shelter costs really started ramping up, this was really the misery coming out of COVID. And we've been really seeing a moderation really smooth here. Now, this data is some weird data. I mean, honestly, a lot of people have, if you're a statistician, there's a lot of debate over how exactly the Fed should be doing this and the way they calculate owner equivalent rent and all that. But I think the key thing here is that this thing appears to have turned. If you look at some of the things like rent.com, they have this index. If you look at other things, you read Redfin, they have Redfin and Zillow. Check out their blogs sometimes. They all been basically barking up, all kind of saying the same thing, which is that rents are coming down. You see different reports from the credit rating agencies talking about there's now an oversupply of apartments. The last, even if you look at the last housing starts and building permit showed a sharp pivot away from multifamily construction. That also kind of suggests, these guys are saying, all right, we're done doing that because we have too many, and now they're moving to single family. The key thing in all of this is that this rent thing, it seems to have turned, and that's really what mattered. In the CPI today, it was the second lowest reading. I had to dig down, and I got these numbers out, and I don't have them in front of me. I did do like a kind of ugly spreadsheet for it. But the shelter increase 0.2% was the second lowest since September of 2021, month over month. Not this is year over year here, but if you look this chart, unfortunately, I have not been able to make it do it. But if you go to percent change, this will show sequential, month over month. And if you look at this here, I mean, the way the Fed's website works, it rounds it, but basically, I guess you can see here. This, if you see the little thing on my mouse, but it's this is like the lowest here now on a month over month basis. In it's in since back here. So the key thing is this part of inflation, which is the most important part of inflation, has come down. So what spiked? Apparel, which is like 1 month up, 1 month not. It's a crazy one, and then then you also saw transportation, and that's an incredibly volatile one as well. So you put all that stuff together. I think that the key thing here is the big trundling part of inflation, the big thing that is like that slow moving straight line, not the volatile crazy thing like apparel or transportation. The big item of inflation, shelter, is coming down, and I think that's really what we've got to be focused on. We also have to remember that the Institute for Supply Management's manufacturing report showed a really negative prices index last, well, I guess it was it this month or it was in September. Yeah, it was a September reading. And basically that was also something that, so I mean, there are signs here. Now we're gonna have some craziness because of these hurricanes are terrible and with everything that's gonna do. There will be like some of the numbers. The Boeing strike seems to push up initial jobless claims. There's gonna be some spike from energy that kind of will filter through in the current month. But I think the bigger point here is that we are in a spot where the inflation thing has the shelter is ultimately the real kind of direction here, and that's the main point I want to make. And it looks like we're in a decent spot on that. Now, Another thing that was interesting. Um, well, let's actually take a look at crude here because it's up today. There was something out of Iraq where basically the Iraqis are trying to like not overproduce oil or something, and they shut down some oil out of Kurdistan. But anyway, here it's kind of interesting to see the 78 level. And I think again, do we stay below this? So these are some of the intermarket points I look at. These are things off the S&P, and I think all these here are kind of interesting. Now, if we go back to the S&P really briefly here, we can actually see that I'm pretty sure we have right now an inside day. That's not a bearish thing. Hit a new high, and you just pull back and hold, tight little inside day. This is a bullish continuation pattern. So we have the pieces in place here. I think these are just kind of interesting. And I think it's important to kind of see that. I think we also have to remember, if you read FactSet, it's nice. They put out this report every Friday. We're going to start seeing double-digit earnings growth. According to FactSet, I'm not going to predict anything, but according to their summary of analyst reports, of analyst estimates, S&P earnings will start growing at a double-digit rate in the fourth quarter, meaning the data that comes out in January. All right, so this quarter is still supposed to be a relatively low quarter, the data we're going to start getting in the next few weeks. But the thing is, the market looks out into the future, and there's this expected ramp. Now, let's look at a ramp. Let's look at GDP now from the Atlanta Fed. This is accelerated up over 3%. So when you have this sort of thing happening, you have some impact from the hurricane that's going to have an impact and stuff like that. But the overall GDP is surprising to the upside, and shelter trending down, double-digit earnings growth expected. All these things together, I think the macro environment here, and then you also consider the fact that there seems to be cash on the sideline, people waiting for the election, the wall of worry, all those things. You put it together, and we have a very tight pattern, and this is what I've been talking about a long time. This pattern that I don't even have a name for. I just call it tight consolidation. I've talked about it a lot in this market. How you have tight consolidation and continuation. You don't get significant pullbacks. You get these periods of weakness, but we've often seen this sort of thing when the market ramps, holds, continues. And it looks like that's kind of what we're doing here. I mean, it's very similar. Look at May here. Ramps, holds a little bit of a chop down, and then it continues. But what are we doing? We're staying above that 21-day exponential. Look at how cleanly we follow this 21-day exponential. And here we are, we followed it right there. And here we are, we broke back under it in September, but who do we have? We have a higher monthly low. So we're now in October. All right, here's August. That's a low. September, higher monthly low. Now what do we have? We actually have in October a higher monthly low above the July high. Okay, so again, these things overall are kind of telling us that there is a lot of money on the sidelines and people looking out to the future and saying the average American doesn't believe the economy is good. There's negativity overall. But when you look at the data that's out there and you look at the likely trajectory of things, like I said with shelter costs, like I said with earnings growth, you put those things together, you don't have to be crazy to envision a situation that is better in 3 to 6 months. And that's what the market's reacting to here. So I think we really have to remember that overall sort of situation that we have. Um, Also, the headline CPI, even though it was higher than expected, 2.4%, was also the lowest reading since February of 2021. So again, all these things are just kind of interesting to me. And now let's just go back and look through some of these other things. I cover the main things on here that were important to me. Another one I have on this workspace I share sometimes with you guys. I like to look at the RSI, and I've just noticed this sort of pattern. You see RSI get up here, and it's just kind of there. It is. It's not even getting overbought. It's just lurking. This is actually not a bearish thing. It's showing that we have a slow, gradual grind with the rate of change slightly positive. RSI, kind of near overbought, but not there yet. This is the sort of thing that if nothing terrible happens and the market doesn't crash, this is the sort of thing that has the potential to accelerate. And I think that's what people have to kind of realize is that this market is not giving any clear sort of signal of a breaking to the downside. And I also want to point out that I'm finding breadth, some of these breadth things like advanced decline line and new highs and lows to be really like not very useful. I want to just point that out. Some of these sort of internals I have not found very useful. Instead, what you might want to do is if you look at this some of these other articles we did this article a couple days ago about software and about the Nasdaq, and I've written about this some. I've talked about this some. In fact, I think what's really interesting is what we really see. Let's go over here to our MT main, and we'll go to key ETFs. And what we see is it basically, we have seen the mega cap sectors, which are technology, communications, and consumer discretionary, all outperforming in the last month. Now, we had this spike in energy that's been kind of in here as well, but it isn't energy kind of jump back into the top. But the key thing here is that we had a period when those three were lagging and now they're outperforming. So this article here, we basically show the relative performance of the Nasdaq against the S&P 500, and it has this period that this tendency that once it starts to kind of get moving, it can kind of have these steady multi-week sort of periods of trending. And this is the way growth stocks often behave, and it's what we're seeing. And it's what we're seeing in things like Nvidia. And I think it's again, all these sort of things suggest that we could be in a spot where our leadership, the large cap growth jumps in. But what's interesting here is in many ways is it goes beyond mega cap growth. Now we have stocks like Oracle, Palantir, Palo Alto Network, Salesforce.com, IBM. They're now involved. They're engaged in this bullish uptrend in technology. So I think this kind of comes down to one of the key things I want to mention here, which is that we now have a new phase of AI. We've moved from from the picks and shovels to the actual usage, and what we're starting to see is the AI agent phase. This is really something that when you look at, I mean, Mark Benioff was the first guy I know who spoke about it loudly last month. Jensen Huang was talking about it this week, guy from NVIDIA. And now we're seeing, more evidence of it kind of spreading. And I think this is something when you look at, and I'm not, an IT guy, I'm not sure exactly of all the moving pieces here, but what we're really seeing is Oracle, and I'm not sure exactly if Oracle is agents, but the thing is that what we're starting to see is that we're starting to see, AI go beyond just the chips, different companies finding ways to use AI, in their products and all those things. Maybe for one company, it helps them boost revenue. For another company, it helps them improve product mix and have margin. All those different things. The key thing is that this is now, as it spreads, there's other tech companies that are profiting from it in many different ways. I did a trading view I did today on this other one, which was what was it even called? I can't even. What was it? It was APLD, very volatile stock. Applied Digital tried to rally, kind of struggling here, but this is actually one here where Nvidia got involved with them, and the options activity has really been increasing on this one. But the thing I thought was interesting about this one was that you basically have a range here between this high back in January and this high back in the summer. So I'm just kind of watching here between like 7 and about 9. But this is a very volatile stock. It's a small sort of company, but this is sort of name that people might just kind of be watching to see if anything interesting happens with. But this is not agents. These guys make like the racks and stuff that go into data centers. But we're now entering this new kind of phase as it kind of spreads across the software space as things like Palantir and stuff accelerate. So that I think is what we have to start kind of looking at now. And I think it's going to be interesting to say, all right, well, look at Oracle. If Oracle is doing, we start to see, excuse me, as we go down, we did a trading view idea this week on Palo Alto Networks, not AI, but again, we're seeing software names start to come to life. Now, these have not really been very strong until Palantir started running a few. Palantir and Oracle, they were the ones that made it happen a few weeks ago. And so I think that's, kind of the way to think about it. It's been a chip story. It's been an NVIDIA story. Now it's becoming a software story. And so that is the a big takeaway I have here. In this article, I talk about some of these different companies that were kind of involved in some of this stuff. I mentioned them here, and also IBM, Oracle, Palantir, Accenture. There are some other ones here. So again, I never try to get too in the weeds or be too knowledgeable about any individual thing. I believe knowing too much can actually, from a trading perspective, can blind you to risk. Especially, you fall in love with stocks, and then they end up, having issues, and you can't see them because you've convinced yourself that they're great. But I think the key thing here is that the price action is giving it to us. So that's what I want to talk about. Now, I also thought was interesting is that Micron today is showing some signs of activity. Micron had this bullish earnings here, and look at how it basically held the 8-day exponential moving average. Now, we have this thing over here on our MA tools, and if you'd been using MA tools and you had Micron on it, you would have basically seen that Micron was testing its 8-day moving exponential moving average. See this blue line? Maybe hopefully you can see it on this, but basically it touched it almost every day for the last 2 weeks, a week and a half. So this kept giving those sort of signals, and I want to just kind of mention that there's this sort of environment I think where knowing a bunch of these sort of names that seem to have some growth potential and kind of just watching them with different tools, like for example, looking for things that hold the 8-day exponential moving average, and then looking for some other stuff that I'm about to show you with my new workspace, um, is the sort of thing people might be looking to do. I also wanted to mention before I get on to the other stuff with tech was that you know, gold and silver trying to rally today. I don't really know what to think about gold and silver here. I mean, the interest rates might stay higher than people think, because the economy is relatively strong, and I think the inflationary stuff is not totally gone yet, and I think we're gonna have some lingering effects from these hurricanes and things. What that's going to do for inflation? I mean, who knows what that will do to property rates and stuff as well. So on insurance, so there are issues I think for inflation, and I think at the end of the day, every time we think the Fed's going to be super hawkish, they get dovish, and every time we think they're going to be super dovish, they get hawkish. So I think we have to just be a little bit careful here, assuming that it's just going to be a pure path down in interest rates. And so I see some issues here in my view with gold and silver, especially if we get to double-digit earnings growth. I'm not sure if gold and silver really do that great in that sort of environment. But let's actually um, just mention one other thing, which is that there is this BRICS conference on October 22nd through 24th. It's like Russia and China, and they want to create a global trading system that's not the American dollar and all this stuff. I mean, the one thing about that I think is interesting is that allegedly 40% of their currency basket, they're going to have some kind of blockchain based currency or something. It's really complicated, and you can read about it. There's all kinds of stuff online about it. But 40% would be backed by gold. So, this could be the beginnings of something going back to like the 19th century of a gold standard globally, the way the British pound used to be. Now, again, these are big kind of pie in the sky conversations, and but I do think it's just important to realize that gold and silver now have a potential fundamental story behind them, not just as a hedge on inflation or whatever, but there could actually be something here where for the first time in like decades that gold goes back to being an actual monetary thing. And I think if you look at the amount of money that's grown currency in the world, versus gold, I mean, if you do the math, gold probably, based on the amount of dollars that exist and things, gold should probably, if you were to assume a constant, value, it should potentially be higher. So I think people could argue here that there is that potential. I did want to mention that because I'm looking for, for things that are kind of trends and catalysts and stuff like that. And people talk about that, but I also look at kind of gold and silver here, and I'm kind of wary of them because I think that, with the strong economic data coming up and the fact that we are in what really is looking to look more and more like a 1990s style bull market in stocks. I mean, that is not likely to be. That was when gold basically fell apart, was the late 90s. So let's just kind of, I just want to mention that. Now, all right. Some of the points here in my article that I just wanted to, quickly mention here was, again, these numbers coming out are good. So, I mean, they've been good. NVIDIA apparently managed to fix their Blackwell, production, this like new chip that's going to be like this really big chip. And the key thing though is that if you, there's a bunch of articles on it, but they basically have overcome those manufacturing issues according to a statement they put out this week. So they're saying it. And Jensen Huang said a week or two ago. What he said a week or two ago, he would have gotten sued for if it wasn't essentially true. Because I mean, so he knew what he was saying, and now they're confirming it in an official statement. And then you have Taiwan Semiconductor had strong pre-announced of revenue for the September quarter. Um, Also, when we get to this widening of the AI thing, I mean, I got to say, I remember the 90s when, like, the internet was first being used. And you just got to realize if we were, say, we're in 1994 ish when the internet was there, but like no one used it, you know, Amazon was coming, Google was coming, Netflix, all of those things were in the future. And that's kind of where I think that's what the AI agents thing is. It's kind of like the internet. At first, it was like, oh, that's cool, but what's the use for it? And then you start having e-commerce. Well, that's kind of like AI. It's like ChatGPT. That's kind of cool. I mean, I use it for coding a little, but it can't really fully automate and get into my email and like respond to this person, respond to that person. But that's what AI agents will be. The AI agent will sit in your computer or in somewhere in your enterprise, and it will do jobs of employees. It will actually have the ability to do all the stuff that people do. I mean, if you want to write an article with ChatGPT, you got to copy and paste it in. Well, in the future, the way agents and things will work, if it's an email, it will write the email. It will read the email coming in. It will know who it's from. It'll check customer records. It'll compose an email. It'll send a response. It'll take the action. I mean, there's things like that. And I think Timu is actually starting to do this of like customer returns and all that this stuff. And, so anyway, that is the direction of this. So I think we have to put ourselves in that spot of seeing like, it's kind of like, if you looked at the cars in the 1920s, well, I mean, Levittown happened 30 years later. Suburbanization, it lasted for decades after the technology of the car was in place. So that is, I think, the bigger story here. And that's what these things are telling us. So, OpenAI, I want to mention that because now OpenAI is opening offices in all these different cities. If you look, there's an article about it recently. So I think the thing is we're at that point now where like more and more people, if you talk to your average guy out there, most people have never used ChatGPT, and you're going to see that. And I haven't even mentioned this, but the iPhone is going to start having AI as well. So these things, you look out into the future, maybe they're next week, they're next month, but in 2 to 3 years, they will have happened and they will be in a state of happening. And the market is starting to price that thing coming into the future. And I think that's where we need to be focusing now, because that is why the NASDAQ is just grinding upward here. With this tightness, because the market sees that coming, and also it knows about shelter. It knows these things that are out there. All right. So interestingly, Bank of America, I've been talking about this double-digit earnings growth for several calls now. Bank of America said the same thing. Said people are too negative on earnings. And then that could be a positive. Citi basically raised its estimate for chip sales, and a separate note from Citi basically increased their estimate for data center capex for companies like AWS. So also, Goldman basically said the hedge fund sold record amount of Chinese stocks this week. I mean, I think this Chinese thing, I have been, very overall remaining, not bullish on China. I think that they have structural issues. And, to me, debt is one of those things that, it's a real sloppy situation that I don't see any meaningful way that they're going to fix it. I think that when you think you have a country where you're not even allowed to own property, that somehow they're gonna fix that situation. To me, it's very strange. So I think that's one of these things that's going to remain a negative out there. I am running out of time, and I got to jump this thing. I did also want to mention here is that some of these travel stocks are starting to accelerate. We'd actually talked about Carnival and these cruise ships, and some of these stocks are trying to show, they are starting to kind of accelerate here. And a lot of these stocks, from an overall perspective of their balance sheets, they trade at discounts. Now, I got to show you, I'm going to give you this next week. But this Workspace, what this does is this allows us to see stocks that are starting to hit highs. So, for example, this shows Booking.com is hitting its highest level, in this case, in at least 999 candles. So what I like about this is I'm looking at this for stocks that that are doing this, that are getting out of patterns like this. This is something that got me interested, but basically when I looked at Palo Alto Networks. it started hitting here, its highest level in 20 days, 30 days. And this is what we're starting. I think we want to be kind of thinking about is stocks that are in these kind of long periods of consolidation that have been kind of forgotten. You know, the next Oracle, the next Palantir. That's how Palantir started. It was like basically just sitting and people had forgotten about it, and then it just accelerated. And I think now that is some of the playbook we want to be looking for. And the one that grabbed my attention, I want to say, is Block. SQ, they had last earnings report was good. The stock has gone nowhere for a long time. And this was a monster growth name back during the pandemic. I have my weekly chart over here. But if we look at Square, well, Block it's called, I'm sorry. I mean, this stock, hey, look at this. It's basically the whole COVID rally erased. And here it is back here. So look at how these moving averages are tight together. I want to just kind of say that here. This was one that was jumping out on my list. So what this indicator does, the high-low bars, it basically tells you you're the highest in so many bars or the lowest in so many bars. So for example, Moderna is the lowest in at least the price. This has 900. This has 1,000 candles loaded. So this is the lowest in at least the last 1,000 candles. That's what it's telling you. And if I click on it like this, it's going to show me that it's at the stocks that are making highs. This is like, so for example, Team Atlassian, which is owns Jira, this is their highest level in 60 candles. And it's starting to tell you, all right, it's starting to accelerate. And so this is Workspace. I'm going to give you guys next week. So make sure you come on back. We will be back for market trends on Monday. I mean, state of the market on Monday. Thanks for joining me, and I'll see you guys next week. Have a great weekend.